The global economy is recovering. We're moving from 3.2 last year to 3.6 this year, 3.7 next year, catching up with pre-financial crisis average growth. This region, Asia, is going to continue to be the big global growth engine that it has been. And compared with this average of 3.6, Asia will be generating at least 5.5%. So that tells you a lot about the role played by the region in global economic development.
Do you see evidence of inflation in this part of the world?
There is. It's a balanced situation. You have countries that are currently at relatively low inflation levels, and where we believe that monetary policy must continue to support recovery and have an impact on price levels. But there are countries where inflation is still at quite sensible and good levels.
Having said that, do you see several banks in Asia tightening in 2018?
Monetary policy will be tightened in those countries where the economy is picking up sufficiently fast and where inflation is rising. So this is going to be the case in the US. It's happening very gradually, very smoothly, and we hope that it continues at that pace without any abruptness, without massive capital movement as a result. The UK has just recently raised interest rates again, but in this part of the world, I'm not sure that I'm seeing it right away.
We saw a Big Bang moment for China yesterday when it opened up further its financial sector. Mm-hmm. Is it more significant or is it more symbolic?
I was telling you earlier that services have to be better integrated and more open to trade and to exchanges. That's one indication. Financial services in China were fairly constrained, restricted, with quite a lot of barriers to foreign direct investment. The fact that it is considering to remove at least partially those barriers and to move above the threshold of 50% and then gradually to eliminate those thresholds, that's an indication of two things: openness and also better strength and confidence